Good afternoon, everyone. This is Henry, and as we get into tonight's video newsletter, I wanted to show you one of my favorite strategies. You can apply it for zero DTE trading. You can apply it for position trading. There's all kinds of ways to use the unbalanced butterfly. And if you're focused on just puts and calls, I can appreciate that, but I really think there are certain situations in the market that lend themselves to these complex spreads, and we had a good chance to discuss it today in the S&Ps. So looking here at the cash index and working to figure out the final hour, I look for a couple different inflection points, one of which I like to find right there at the bottom of the hour. Well, the bid showed up today a little bit early, and we see this through the close above the high of the low bar here on a 3-minute chart. That kind of set up the move here, and that's where we established that spread, right? Because I think it's easy to look at this and think maybe it'll pin 75. That's a focal point. That was an important strike. But if you say, I'm going to try a 1 by 2 by 1, a standard call fly, and see if we can end there, even if you did it $10 wide, that doesn't make money here, right? You would have overshot it and you lose the debit paid. But by setting up this unbalanced, I look at it and say, all right, I think we're either going to be at or above 54.75. So I do it through a 1 by 3 by 2 utilizing put options. When that transaction goes for a credit, that means you're only going to have risk in one direction. By doing it through puts, it would be to the downside. So even though we overshot 75, we still made $2 on a $5 wide unbalanced. And it's really just one of my favorite ways to trade. Now, you can see that there, and you can see where we did it again for Google earnings, right? And this follows the exact same process that says, look, I'm generally bullish on Google, but if it opens up sideways, I'd like to make money there too. So what we did is sell 3 of the 160 puts, buy 1 of the 165s, and 2 of the 155s. That trade went for $1.50. And now we can see Google called up here to 166 after hours. So if it goes infinitely higher, we make that $1.50. If it softens back up and comes to 160, well then we're in the body of our butterfly, and that's where the trade will really look the best. So those were 2 instances where we were applying that strategy in the chat room today, and I think further that it will be applicable tomorrow. Now, a lot of context, right? And we got to just kind of take it and see how the day goes. But this is where it might be a spot to look at it on the opposing side. So those 2 that I've shown you were done through puts and had no risk to the upside. Now that we have come so far, and if you want to got to be careful being a contrarian, but let's say that you want to short 5,500, or that's that same logic saying, I don't know how far we'll fall, but I don't think we exceed this strike. Well, that's where you can look at doing the 1 by 3 by 2. And as price is pushing up into that, the trade will go for a very respectable credit. Now, if it just keeps on going, it is still risk defined. You'll lose the difference of that spread, but if it pins, you do the best, and if it rolls back over, you make money there too. So again, a very versatile strategy. 2 spots that it showed up today, a spot it might show up tomorrow, and I'll be looking forward to trading that with our group of traders in the chat. So y'all have a great rest of your Thursday, and I hope to see you tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.